Good morning, traders. Welcome to today's market daily review. This is Fred Razak at CMTrading. Today's special event is the Mega Week. Okay, we're going to be including the FOMC, the NFP, and the French elections. Now, we want to jump straight into this and discuss it. And what we'll do is we'll go over the exact times and dates that this important event is coming out, and then we'll go over and do some chart work, and then at the end we'll have some question and answers. So looking at the economic news starting from today, of course at 8 p.m. South African time, FOMC, it's the interest rate decision in the United States. Most likely, and the word on the street is that Fed Chairman Yellen will be increasing the interest rates. This has not happened in a very, very long time. So this is a pivotal moment for the United States as to the direction of the interest rates. So that's why it's so important. Now, Friday, we have our monthly NFP, non-farm payroll. It is an important number, maybe the least out of all the three that are coming up. Okay, but it is an indication. Now, I must add that this week is also, if you pay attention to the Dow Jones, it's a very big week for earnings, corporate earnings, that is. Okay, so Apple, Facebook, AIG, Microsoft are all reporting their earnings this month for this quarter this week. So that adds a little spice to the situation. And then, of course, on Sunday, okay, which is probably the last of our mega week, is the French elections. Okay, who's going to be the next president of France? And it has been almost, decisive already as who's going to be it. And as we saw the last time around from the French elections, we had a tremendous explosion in the markets right afterwards. Markets really rallied very nicely. The euro rallied, etc. The Dow rallied, and the DAX rallied. Okay, so a lot of things rallied, to say the least. So it is a very, very special event with these three things coming up. Okay, so we're going to go over the charts right now to see what's going on with the markets. All right, so looking at the charts, we're going to start here with the Euro USD. Okay, we're looking at the Euro USD trading at the top of its range. We're in a daily chart of the Euro USD trading at 109.19. Now, we had this massive explosion right after the elections last time. As you can see here, we've had a decent amount of resistance at this 109.45 level. We're selling, and we're trading between this 108.70 and 109.45. So two things. All right, we haven't been on these levels in quite a while. If we look at the daily chart, you'll see what I'm talking about right here. We haven't been here in a long time. Okay, so the last time we were here, let's do a crosshairs here. We haven't been here since November of last year. So, this is a major retracement for the euro. Okay, especially if we have a prime minister or president in France that is pro the economy, pro the euro, and that's what it looks like it's going to happen. So the resistance is right here, 109.42. If we do break above it, we could definitely see a challenge to these upper levels, okay, of 112-ish level, 113-ish level. And this hasn't been the case in a very, very long time, right? We haven't seen this go as far as this in, like I said, since November. So looking at a shorter term, okay, like I said, we're trading between these two levels right here. Just trying to hold 1 second. Okay. So really we're trading, just below this 109.45-ish level and right above this 30-day and 14-day moving average. So the question is which way we're going to go. All right, so you have a couple of options here. I highly recommend that traders don't trade going into the number. If there's three options you can really do. Okay, trading into the number, trading after the number, and obviously not trading. Okay, and there's one of three expectations when you have major news events. There's either a massive rally or a massive sell-off. Okay, and we just continue going in that direction. So if we go up and then it slowly continues going further up. okay? Or we have a massive move in one direction and then a correctional move in a separate direction. That also happens, okay? So that could be one of the two things. The last one is that there's no sort of response to the market, and I don't think that that's going to be the case. So looking into the French elections, probably the markets are closed on Sunday, so your availability to get into the market on Sunday night, Monday morning is going to be quite short. So what you look to do, okay, if you are looking to get into the market and play it, number two, I would suggest trading a little bit smaller because the volatility, it's choppy. You could, there's a lot of movers, shakers, and makers here in these type of situations. So that's my other advice for traders who are looking to get into it. But if we do fall between this 108.71, we could definitely see it go down to 108.13. I think we could even see more massive moves than this, okay, honestly speaking, because when the Brexit vote came out last year, we had 300 pip moves, and they were normal, okay, relative to the size of what the market expected. So, it looks like it wants to take it up higher, okay, but I wouldn't celebrate it just yet to go into this long, but I would really play the levels very carefully. So, the point of this presentation is just to be aware where we traded before, where we could possibly trade, and what you can do in order to take advantage of it. Now, the GBP USD has been very, very strong. We're trading at 129.26. We're at a resistance level. So if we look here, again, we haven't been here since last year. Okay, this was the Brexit move from last year, obviously, but somebody knew something about something when we sold off from 150, 172 down to 144, and we further sold off. So we're trading at the top of the move here. We traded, between this 120 and 125-ish level for a long time. We finally broke up just recently, and we're looking to break this higher high here. But there's this resistance, previous resistance, subsequent support right here. So what you look to do, again, that if we do break it higher, we could definitely see it going to 138, 135-ish level as my next point up. However, if we do fall further down, we could see it go down back to 125-ish level. That's my next move. Now, looking at gold sold off quite aggressively here, okay, and gold is definitely going to be a player with this with all the news that's coming out. As you can see here, we traded as high as 1300-ish level at 1295-ish, and then we sold off down to 1255. The markets, though, okay, haven't gone as further north as gold has gotten south. So gold has gotten a lot weaker, okay, relative to the markets. The markets, I expect them to go up, and they haven't. So we're also here at a beautiful spot, which is previous resistance, subsequent support, and this might be a pivotal move. If we do jump off of it, okay, you might want to see it bounce a little bit, maybe about 5-6 points. That might be a short-term move that you would like to do today. So that's something to look at. Oil, I don't think oil is going to be as affected, okay, with this storm that's coming up. All right, but we're trading below $50 a barrel. We're trading at $48. Drilling in the United States has gotten more aggressive. We're coming towards this next pivotal point of support right here at $48. So I'd like to see some sort of bounce here. We had this high of 53, 54-ish level, and we're just trading in a new range, I believe. So keep an eye on this as well. Now, looking at the Dow Jones. The Dow Jones, like I said before when I mentioned gold, should have been much higher up. It should have been at 21,000, okay, and maybe not at all times high, but should be at 21,000, okay, and we're not there. And now we've rallied over 700 points from our low of, just the beginning of last week, okay, and we traded all the way up as 20,984 from 20,360, 20-ish level, and now we just look like we just sold off just slowly but surely. However, keep an eye on this, because if the Fed does raise its rates, I do expect a little bit of a sharp sell-off. Now, we may correct right afterwards, but I do expect a little bit of a sell-off. It's kind of funny because the Fed raising the rates indicates that the economy is actually doing well. okay, because they could afford to raise the rates. That means people are comfortable with paying more money to borrow money, okay, that there's a lot of confidence in the market, which there is. However, the market usually relates that as negative news because that means it's going to be harder, okay, to come up with the money next time, next quarter. Corporations are going to have to, it's going to be more expensive for them to borrow money, etc. So this is something you got to keep in, it's a little bit, you know, counterintuitive, but this is something you have to keep in mind. Looking at the DAX, we're at all-time highs, okay, 12,515 here. I don't want to say that we're breaking out all-time highs because we're not. I'd like to see it a little bit sharper move, but as you can see here, we're at all-time highs. So this is something also you got to keep on your radar to see, you know, how it's going to respond to the market with the French elections on Sundays. Are we going to gap down? Are we going to gap up? If we do gap up or down, there may be a filling in of the gap. Don't jump in, you know, before you see an impetus for you to have some sort of edge in the market. If you see that we gapped up and we're not going further up, maybe it would be a good place to short it in the anticipation that it's going to actually fade itself and correct itself. You know, the same thing holds if it's gapping down, okay? So, you know, but be careful, keep your stop losses sharp, and just be aware of all the levels.